The truth of the US banking crisis has been exposed for the world to see. Silicon Valley Bank CEO has been exposed, and the real reason why the bank collapsed has been revealed. In today's video, we're going to go over the shocking footage that reveals how weak the US banking system is and why more bank failures are coming. Because your money is not safe in the banks, these bank executives are incompetent and they're gambling your savings away and are facing no consequences. So everyone, let's get into it.
For being here, Mr. Becker. When interest rates go up, the price of government bonds, especially long-term, long maturity government bonds, goes down, doesn't it?
Yes.
Like he puts it here, everyone, it's very, very simple. When interest rates go up, bond prices fall. For example, if there's a government bond paying 2% interest, but then they issue new bonds paying 5% interest, which bond are you going to take? That's right, you're going to take the bond that's paying 5% interest, and that's why all these bonds on these banks' balance sheets are falling.
You don't have to be Einstein's cousin to know that, do you?
No, you don't.
Man, Senator John Kennedy sure is entertaining, and he sure does know how to roast people and make them feel very, very stupid.
Okay. Now, your bank had 55% of its assets invested in government bonds, didn't it?
Roughly, yes.
And the Federal Reserve raised interest rates, didn't it?
Now, you think these banks would diversify when interest rates started going up, but it looks like they didn't.
Yes, it did.
And the value of your assets went down dramatically, didn't they?
Yes, it did.
And you didn't have hedges, did you?
Senator, as previously mentioned, the decision around hedges was made by our Asset Liability Committee.
Mr. Becker, you were the CEO of the bank.
Shocking, people. Shocking that they had 55% of their money in one asset class, and they didn't have any hedges at all. Now, of course, classic, what they do, look, I'm the CEO, it wasn't me, it was this other department. It's all their fault. But wait till you see what happens next.
You didn't have hedges, did you?
Senator, there were hedges that were put in place, but I don't recall the details around when they were put in place.
You're the CEO and you had 55% of your assets in government bonds, and you don't know whether you were hedged or not?
Senator, as previously mentioned, I don't have access to my SVB documents, so
well, I know that, and I wasn't CEO. You weren't hedged.
Now, he's a CEO of a multi-$100 billion bank, and he doesn't even know, apparently, what's going on with his money. Either he's a liar or he's completely incompetent, and he might actually be both.
Now, if you'd bought those hedges, that would have cut into your profits, wouldn't it?
Senator, I don't know the details of the decisions that the team were evaluating.
But if you bought a hedge, the hedge cost money, and it would have decreased your profits, wouldn't it? Do hedges cost money?
Yes, they do.
And so if you bought hedges, you'd have less money, right?
Senator, it depends upon, yes, they would cost money, but it depends upon how the hedges
And if
were
you'd
structured.
made less money, that would have affected your bonus, wouldn't it?
Wow, everyone, this CEO is getting roasted and the truth is coming out. The reason why the banks didn't buy hedges is because, of course, profitability. It hurts their profit margins. When they do these earnings reports, it hurts their profit margins and their share prices fall. So a lot of these banks, they put profit before securing your money. And this is something that's going on rampant in the banking system, but nobody's batting an eye. And of course, these CEOs are doing it really tough. Now they've only got one private jet instead of two.
Senator, our compensation was predominantly long-term in nature. And so I know there's been lots of discussions about compensation being short-term.
Mr. Becker, you made a really stupid bet that went bad, didn't you?
Senator,
and the taxpayers of America had to pick up the tab for your stupidity, didn't they?
Senator, there were a series of events.
Wow, Senator Kennedy's really not holding back. Yes, he did make a very stupid decision, but unfortunately it's not very funny because now we're having to foot the bill for these bankers' silly decisions. Really what should happen is they should have to pay for it. If, for example, they've got $1 billion in net worth, well, take all their money. I don't know why you and me have to keep on paying for these silly bankers' stupid decisions.
Unprecedented events that occurred that led us to where we are today.
No, this wasn't unprecedented. This was bone deep, down to the marrow, stupid. stupid. You put all your eggs in one basket. And unless you were living on the International Space Station, you could see that interest rates were rising and you weren't hedged.
That's exactly right, everybody. It was very, very simple. Me, a poor YouTuber, saw this coming. So I don't know what excuse this top banking CEO of a multi-$100 billion bank has. And Senator Kennedy put it very, very simple. It was because he was silly or he was greedy. And I think it's probably the latter with a little bit of the first. These banks saw that the Federal Reserve would come and save the day no matter what, but unfortunately they didn't until it was too late. They also flew too close to the sun and wanted to keep their fat profit margins when interest rates were rising. For example, they wanted to charge people 6-7% interest on mortgages and pay depositors 1 or 2%. And they also want to charge people 20% for credit cards and 11% for personal loans. People, this is a prime example of how weak the banking system is. They're taking your hard-earned money and they're gambling it away on these speculative assets. And look at this bank, 55% in one asset class. They didn't diversify, they didn't hedge. And if you think this is the only bank that's doing this, you need to think again. Because the banking system is sitting on over $600 billion of unrealized losses. And for example, JP Morgan, Bank of America, them alone are sitting on around 100 to 150 billion of unrealized losses. So what I expect is the banking crisis, I don't think it's over. I think this is the calm before the storm, before we see another round of more bank failures. Because remember, after Silicon Valley Bank collapse, they said that was it. But we saw 3 more banks collapse. And all it's going to take is one black swan event or one bad inflation report forcing the Federal Reserve to lift interest rates higher, which is going to make these bonds on these banks' balance sheet fall even more for the chaos to begin again. So your money is not safe in the bank, because we've seen with banks like JP Morgan, if they don't like what political party you're associated with or whatever religion you're with, they could close your bank account. Because look at this, 19 Republican states accused JP Morgan of closing bank accounts and discriminating against customers due to their religious or political beliefs. This is very, very worrying, everyone, because we're starting to see these mega corporations that the government is propping up that let them take over First Republic Bank. Imagine what would happen if there was only 1 or 2 banks left and you had no other option to bank with them, and if you step out of line, your bank account is switched off like that. And if you think it's bad now, just wait till you see what kind of draconian measures will be put in when they issue a central bank digital currency, and this is why we cannot let it happen. In a letter sent to JP Morgan CEO Jamie Dimon and reviewed by Wall Street Journal, Republicans representing 19 states said the bank had cancelled major organizations' checking accounts and had asked screening questions focused on religion and politics before reinstating them. This is a huge breach of privacy, everyone. It's a huge breach of political freedom and also religious freedom. The bank should have no business asking you questions about whatever political party you're associated with or whatever religion you're associated with. But listen to what they tried to do next. The complaint said that an employee at the bank eventually told the group that JP Morgan would restore the NCRF account if it provided a list of its donors, a list of political candidates it intended to support, and details of criteria used to determine its support and endorsement. This is absolutely crazy, everyone. This goes against Che's very own anti-discrimination policy. So this is an open attempt of JP Morgan trying to implement a social credit score and trying to condition customers of essential services to start telling them their religious and political associations. But what they did next shocked me the most. Further, the letter claimed JP Morgan asked the Securities and Exchange Commission to ignore a proposal for the bank to disclose its policy for closing accounts. Are they serious? JP Morgan openly asked the Securities and Exchange Commission for them not to have to disclose any reason whatsoever why they're closing people's accounts. So does this help their credibility? Does this help their trust? Or does this prove they're doing something very, very wrong? A JP Morgan representative told the Journal, "We have never and would never exit a client relationship due to their political or religious affiliation." Well, I guess that solves it. JP Morgan's telling the truth, and they never did any of these things that 19 states are accusing them of. So what do you think, everyone? Should we just take JP Morgan's word for it? I don't think so. So everyone, what do you think about all this madness that's happening in the banking system? Let me know down below. Now, for my loyal viewers and subscribers still watching, you're awesome. Thanks for watching. I'll see you all in the next video.